Did you know SCHD has consistently outperformed other dividend ETFs while maintaining a solid yield? Stick around to discover the surprising factors behind its popularity and performance. Welcome back to Simply Money. Today we're diving into SCHD, the Schwab U.S. Dividend Equity ETF. Known for its focus on high-yielding U.S. stocks, SCHD has become a favorite among dividend investors, but is it the right choice for you? Let's find out. For those who have watched this channel, you may have figured out I am a fan of SCHD. It is one of my biggest holdings. I'm not telling you to go buy SCHD. This is not financial advice. This is for entertainment purposes only. You're going to need to decide what is your risk factor, what are your goals, what does your financial plan and your future look like, and you're going to need to make your decisions based on that. But I am sharing why I like SCHD and what I look at the future of SCHD and why I think it has a great upside still. When it comes to dividend ETFs, investors often worry about a few key things. First, they worry about market volatility. Can the fund withstand market downturns without losing too much value? Doesn't mean you're not going to lose some value. For example, 2022 was a very volatile season, and the S&P 500 was down over 20%. SCHD was only down about 5 to 6%. That means its volatility wasn't as great. Again, it doesn't have as much upside as the S&P 500, and it has lagged these last couple years, but it overall performs very well, and I believe it's going to continue to perform extremely well and provide that stability during market volatility. The other thing dividend ETF investors get concerned about is dividend sustainability. Will the fund's dividend yield remain consistent over time? A lot of dividend ETFs or even dividend companies have a high yield, maybe 9, 10, 12, 15%, but they're dropping. Their value's dropping, and then maybe their yield goes from 10% down to 5%, then back up to 8%, then down to 3%. It is not consistent. And is it sustainable? Are they going to be able to sustain the yield long term? SCHD has proven over time that its dividend yield is sustainable and continues to grow its CAGR, its compound annual growth rate. Its dividend yield stays the same, but because the ETF has gained market share value, it's paying more. Its dividend has gone up each and every year. The third thing they worry about is performance versus peers. How does it stack up against similar ETFs like VIG or DVY? These are all valid concerns, and SCHD has gained a reputation for addressing them. But does it live up to the hype is the question. Let's take a quick peek for those that maybe are not familiar with SCHD's investment strategy. At its core, SCHD tracks the Dow Jones U.S. Dividend 100 Index, focusing on high-quality companies with strong dividend histories. It's built to prioritize financial health, dividend growth, and yield sustainability. Its historical performance in the past decade, SCHD has delivered an average annual return of over 13%, outperforming many of its competitors. It also maintains a 3 to 4% dividend yield even during challenging market conditions. Let's compare it to its peers. Compared to other popular ETFs like VIG, which is focused on dividend growth, and DVY, which is high-yield stocks, SCHD stands out for its balance between growth and yield. It doesn't just chase high yields, it ensures those yields come from companies with strong fundamentals. What really sets SCHD apart? Its resilience during market downturns. For example, during the COVID-19 market crash, SCHD recovered faster than many of its peers, thanks to its emphasis on quality. And on top of that, its dividend yield has remained stable, even growing, while others have struggled to maintain payouts. And here's the surprising fact. SCHD's expense ratio is just 0.06%, making it one of the most cost-efficient dividend ETFs on the market. So SCHD combines high-quality holdings, a competitive yield, and low cost, making it a top choice for dividend investors. However, it's always important to assess your personal investment goals before diving in. If you want a deep dive, check out this video I did on SCHD and a hypothetical portfolio of $50,000 invested, and see how the dividends have grown as well as the market share and how your portfolio would have done since I believe it was 2015 when I began running that simulation. Check out that video. It's a great way to see the ebbs and flows, the ups and downs, but the long-term growth and ability of SCHD. What are your thoughts on SCHD? Are you a fan? Do you hold some of it? If not, why? If so, why? Tell us in the comments below. And if you like this video, hit that like and subscribe button. Don't forget to hit the bell to be notified of future videos. And we'll see you next time on Simply Money.